Hey, how are you? I appreciate your time again. I've been asked often about the difference with pre-tax and post-tax. As many self-employed individuals are told constantly every year by their accountants or CPAs that they should invest in the SEP IRA. Why does the government allow them to do over 50 grand into a SEP IRA, but most of them don't qualify for the Roth? What's the big deal? Why is that the case? And which one truly is better if you can do pre-tax or if you can do post-tax? There's a lot of misinformation out there. So this video, as you can imagine, I got a great notepad presentation for you. This one's quick, but it impacts so many people. So let's get to it. Okay, this is what I call Brother A versus Brother B. Now, Brother A is our pre-tax brother, and Brother B is our post-tax. Now, both of these gentlemen have $10,000 pre-tax to invest, right? Brother A decides to do that very thing. He decides to defer the tax. Now, instead of defer, I prefer to use the word postpone because that's all that he's doing. He's not saving anything on taxes. He is simply postponing them to his future self. He's literally telling his future self, hey, I'm not going to deal with them now. You deal with them later. And let's see how that works. Now we have to use a tax variable. So let's just say 30%. Brother B decides, you know what? I want to pay the tax now. I want to pay the 3 grand. I have 7 grand left over, and I'm going to invest in the exact same thing as my brother A here, and I double my money as well, and I have a balance of 14 grand. Now, what's interesting to me is how mathematically both of these guys get to the exact same place. There is a lot of just bogus information out there that literally says you have more money in the brother A position. I mean, 20 grand is more than 14, but it's just mathematically false. You haven't paid your tax yet. So let's just assume the variables stays the same. There's a 30% tax rate. So this gentleman, brother A, would owe $6,000, 30% of 20. He would have a balance then of 14 grand. Mathematically, pre-tax and post-tax get to the exact same place every single time. Every time. Now, if they get to the same place every time, then why is the government more interested in your brother A position than your brother B? Seriously, we need to ask that question. First of all, let's prove that they're more interested. On our brother B position, I want to ask you, do you qualify for a Roth? Do you make too much money? You see, there are income limits. Have you ever been told that you can't contribute to a Roth because of your income level? Right? Well, if so, why? If they get to the same place at the end, why is that the issue? But there are income limits. There are also contribution limits. You can only do about 5 grand into a Roth IRA. That's it. So if we get back to that mountain conversation, and specifically when we begin to distribute money, nobody can really get much money into a Roth in order to sustain them for their retirement, certainly. I mentioned that in those bucket conversations. I got major problems with that. So they get to the same place, but the government's going to tell you and many people, oh, you make too much money, you can't do it. And even if you could do it, you can't contribute much money in the first place. It's kind of interesting, isn't it? If they get to the same place, what's the big deal? Now, let's look at, are there income limitations in a brother A position? No, there are not. There are no income limits. You can make $3 million as a W-2 employee and you can still contribute into this. You can, you can be a self-employed individual making millions of dollars and still be told by your CPA to, put $50,000 into your SEP. So the contribution limits, there are contribution limits, but they are significantly greater. I'm told that I'm able to do 54 grand into a SEP IRA, but I can do nothing over here. Now why? If I'm the successful, why would the government, if this is you as well, why would the government want us to defer, to postpone our tax? Isn't that interesting? Have you ever thought about that? Aren't they wanting to collect from us as much as they can now? Why do they want us to be building an asset that they haven't collected on yet. Well, what's very interesting is the math behind this. The only factor, mathematically, the only factor that determines the winner is the future tax rate. Now, see, if taxes are actually lower, then Brother A was brilliant. He deferred it at 30 to pay it at 10. He only owed $2,000. He won. He has a balance of 18. But if they go up, he owes 8. He lost. You see, mathematically, the only variable that determines who wins between these two brothers is the future tax rate. And who owns and controls that? Do you get to determine? I mean, let's go back to the pie. If you grew your assets and you got to choose how much of it you want to share with the IRS, how big would you make it? How big would you make that slice? Well, most people say, again, I wouldn't give them anything. Well, can you do that with your brother A position? Of course not. You have no idea how much they're going to take. It's an unknown rate. So you don't make that determination. Does your financial planners make that determination? No. Do they know what it is? No. Nobody does. Nobody can predict the future. Certainly, we can't predict it for a 30-year spin down coming down the mountain every single year that when we say you'll be in a lower bracket, well, how do you know that for the entire life expectancy? It's impossible. The government does. They own and control this calculation. Have you ever thought of it this way? Don't you see why they tell you you can't do this, but boy, could you ever do this? Do you really believe in your heart of hearts that they're telling you as a successful person, don't worry about it, man. Don't pay us the 30. We're going to make sure we collected it 10 later. Please, I ask you, don't believe that dialogue that you'll be in a lower bracket. All you got to do is read the CBO reports. As a matter of fact, I have a video on my YouTube. It used to be titled Outlays and Receipts. It's now titled What the Government Doesn't Want You to Know About Your 401k. And it goes through the table S5, the proposed budget by category, and it shows you what they're telling us. So this brother A and brother B position affects a lot of people, but very simple math and understanding the motivation behind it can really help people figure out where they're wanting to direct their capital. So when we look at your buckets, and as I've talked about this previously, when we look at new money and old money is what you've accumulated already. New money is your contributions. So we take a look for you. Where are you contributing? Does this make sense for you? Is this building what you wanted, or is it building something you don't want? And we simply lay out alternatives and strategies, and we look at what your opportunities are. So here's what I'd ask you to do. You're going to see the calendar button to schedule with me, right? Or a link for it. Do that. You can get direct access to my calendar and be booked with me personally. We can spend some time on the phone and even on a webinar if we need to look at some of this information for you. So let's get something booked and let's dig into this for you and show you your opportunities. Talk to you soon.